the QM, Quasimodo. Okay, so with the Quasimodo, you can literally Google this pattern, right? But before we understand what a Quasimodo is, first of all, you need to understand the basic, which is a head and shoulder. So a basic retail head and shoulder is obviously the left shoulder. You've got the head, then you've got the right shoulder, and then obviously it drops to the downside, break and retest, continuation, etc. That is a basic head and shoulder. Vice versa for the inverse head and shoulder, it's the left shoulder, you've got the head, then you've got the right shoulder, then you've got the break, retest, and obviously continuation. So that's a basic head and shoulder pattern, right? Now let's look at the difference between a head and shoulder and the Quasimodo. So a Quasimodo is a left shoulder, a head, then you've got a break of the neckline, and notice how there is no right shoulder. There's no right shoulder here. Normally a head and shoulder is like this, and then you get the right shoulder. With the Quasimodo, once you implement this, there's always a retest. Most of the time, there's a retest to the left shoulder, then the Quasimodo is activated, and the same pattern is valid. This will be the neckline, break and retest, or wherever there's some small money levels, and then a continuation to the downside. So the difference is that the right shoulder is yet to be formed. So you've got the left shoulder, the head, right shoulder doesn't form. It just makes a new low, and it completes basically a lower high, and it's completing a lower low, low highs, lower lows, lower highs. So it's a decent trend reversal indicator. Vice versa, if you want to look at a Quasimodo to the upside, is the same thing. Left shoulder, you've got the head, doesn't stop here to complete a right shoulder, it just completely goes up. Then eventually there is a retest. On that retest, then it completes the right shoulder, which should be down here. Then obviously it rallies to the upside. So there's a big difference between a head and shoulder and the Quasimodo. We just draw them out together next to each other, just so you can understand. Left shoulder, head, right shoulder, and then obviously it drops to the downside. Quasimodo is left shoulder, the head, no neckline, then you've got the right shoulder, right? Then it drops. So that's the difference between a head and shoulder and a Quasimodo. You can literally Google this. However, the way we implement it is completely different. So we use the Quasimodo. So this is the little twist that I did to it. So this is your Quasimodo that you will be trading. However, the way I trade it is like this. You've got the left shoulder, you've got a head, then it drops and there's normally not a retest, and it just goes up, it goes long. But then what happens is eventually once price is approaching, if you look to the left, the right shoulder is yet to be made. So eventually what we'll do is we'll see a pattern and we get involved. And this is where you'll be implementing your boomerang, etc. in confluence with the right shoulder, which should be down here somewhere. And obviously at this area, there might be a banker block from approximately there, or there might just be an imbalance or a bank level. Whatever level there is going to be in confluence with whatever pattern that you've got. So 1, 2, 3. And if you've got a Quasimodo all the way to the left, as you can see, left shoulder, the head, and there's no right shoulder, and you're catching the right shoulder, this is a very, very high probability trade. Now, if there's none of this, this is still valid. This is a decent, good trade. But when you've got a Quasimodo, it's a dangerous game. It's really, 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 really powerful, right? We can even see a potential right shoulder here. Look at this area here. We've got the left shoulder, you've got the head, and the right shoulder hasn't been tested. And then eventually it does test from approximately this area down here. And let's just say there's an imbalance here. Then we can implement this as a potential entry. And then this will be your entry right here, in confluence with whatever smart money level there is. So in this occasion, there's an imbalance. In that occasion, it was a banker block. It could be a bank level next time, or even a liquidity pool, right? And then this is a pretty decent trade. But again, you need a pattern. If there is no pattern here, it's completely invalid. So for it to be valid, what you want to see is something like this. And then obviously your pattern, which is in confluence with the 1, 2, 3 boomerang, fake out, 1, 2, 3. You've got the 1, 2, 3. Imbalance, left shoulder, Quasimodo, high probability trade. So just to recap, retail, there's different levels of head and shoulders. There's the basic head and shoulder, right? The more advanced head and shoulder is the Quasimodo. But to take it one step further, the Quasimodo that's completely done way back in time, it could be weeks or months, in confluence with smart money concepts and a pattern, this is what you call edge. So what we can have is a left shoulder, you've obviously got the head, then you've got the break to the downside, and most retail traders will get involved, obviously, the ones that are aware of the Quasimodo, they get involved on the short. And yes, a lot of the time it does play out because it's a more advanced head and shoulder, but most of the time this happens and it just continues going up, right? So there's not really that much edge. Better than a basic retail head and shoulder, but there's no edge. What you want to see is a Quasimodo that's completely done, and then it just keeps on dropping, and then it could be months or weeks or even days or whatever it is. This could be in April, this could be in June, and eventually once there's a retest and you've identified all the bank levels, and then you see, hold on a minute, is there a Quasimodo there? Right, let's look to the right. Yes, there's a Quasimodo, there's a bank level, and I've got my boomerang. This is a nice little decent high probability trade off a bank level that we spotted on the smaller time frames, and obviously implement structure as well. If there's structure on the smaller time frames, there's a break of structure, right? There's going to be a retest. This could also be the retest, so double confluence. So left shoulder, you've got the head, and this is your right shoulder in confluence with your boomerang and your pattern. Let's avoid taking these basic retail trades, which is left shoulder, the head, then the right shoulder. There's no edge in that. Or even if we're taking the basic head and shoulder pattern, neckline, break, retest, there's no edge in this because most of the time it just forms a bullish pattern and it rallies to the upside. This is what you call edge. You've got the head, the left shoulder. All of this is just a complex pullback, and then boom, you look for a pattern, you look for the smart money concept, you look for the boomerang or even the slingshot, and then we get involved on a short. These are powerful, powerful trades.